guys, welcome to another episode of Stable Talks Season 2, powered by Bitso Business. How's it going, Julian?
I am very good, Caio. I'm very happy to have a wonderful guest today, speaking of a very wonderful issue as well.
Yeah, exactly. So today we have Ben Reid, who leads stablecoin initiatives at Bitso. How's it going, man?
All right, Caio. All right, Julián. Thanks for having me.
So, man, introduce yourself. Most of the stablecoin industry, the most native ones, will most likely already know you. But for the ones who are not in our bubble, please introduce yourself, what you do at Bitso, and of course, what you have been focused on in the recent months.
Sure thing. Title is that head of stablecoins at Bitso and also the head of Juno. What's that mean? The way I like to explain it, a lot of people, probably a lot of listeners, are probably familiar with Bitso. They might be familiar with Bitso Business. They might not be familiar with Juno, but they're all sort of within the same company. Bitso, I would say, has, depending on how you look at it, three pillars. There's the core exchange business that we're most known for. Bitso, been around for 12 years now. Strongest exchange in Mexico and operations around LATAM, Mexico, and I would say LATAM as a whole. There's Bitso Business, the cross-border payments arm that facilitates cross-border payments using stablecoins and is the operator of Bitso's ramps, Bitso's fiat ramps in the markets we operate in. And then from that perch, Bitso was pretty early, even though it seems a little bit like obvious now and everybody's talking about stablecoins and their use for payments and cross-border payments, as well as like the growth in LATAM. Bitso was on the leading edge of that. Like Bitso definitely got a look at that before a lot of other companies caught on, just by virtue of its business. And it was from that perch that I think Bitso formed a view that while a lot of the volumes with dollar stablecoins today, there is a place in the world for non-dollar stablecoins, and in particular in Mexico, we've got the right ingredients to give a Mexican peso stablecoin life and the ingredients for success. And so that's what Juno is. Juno is the issuer arm of Bitso, and I was brought in to kind of be the GM, the business head of the business. And we are today the issuer of MXNB, the Mexican peso stablecoin, and we're also partners in a consortium of BRL1, the Brazilian, which is a Brazilian real stablecoin, in partnership with a few other exchanges in Brazil and a market maker.
Thanks, and this is wonderful. And I have a follow-up question on that because, like, many people know like stablecoins because of having like these crypto dollars or digital dollars, but these new non-US denominated stablecoins are kind of a new thing, and they're like tackling different issues. So, why do we need a Mexican peso stablecoin? What's the problem for it was created?
Yeah, it's a good question and one that I get all the time. And the first thing I'll say is to me, it's a broader question. There's a philosophical question, and if you're in the space, which is like, does the world not just need a peso stablecoin? Is there a place for non-dollar stablecoins, or is this just going to be a dollar stablecoin world? What do we believe the world is going to fundamentally look like X years from now? I don't know, pick your number, 2, 3, 5 years. Do we think that there's a place, that there's a reason why the world might need an on-chain peso, or no? And a lot of times today, I find that, we get well-meaning questions where people are asking about the use cases that we see today, and they're taking the lens they know for dollar stablecoins, and they're trying to apply that to a Mexican peso or a Brazilian real stablecoin. And they say, cross-border payments, people are going to start using this instead of dollar stablecoins for cross-border payments. Makes sense. And it's like, I don't know. That'd be great if they do. I'm not sure if that's actually the case, because like today with the traditional stablecoin sandwich, it's fiat to stablecoin to fiat, and the stablecoin in the middle kind of gets abstracted away. The two parties doing it, as long as it starts and ends as the right fiat and the price is right, they kind of don't care what the asset used in the middle is. And that's going to be the most liquid asset to get the price right. It's going to be the most liquid asset. And today, at least, that's a dollar stablecoin. So like applying that lens and saying a peso stablecoin is for payments, there are definitely some use cases, don't get me wrong, and we'll can get into those. Like there are absolutely some payment use cases and some very interesting ones, but it's not so easy as you just take the lens for dollar stablecoins and you apply it over here. There's also like people are like, well, I've heard this thing about Argentina that everybody wants to hold dollar stablecoins. Like, are they going to start holding peso stablecoins? Like, no, people in Argentina are probably not going to start holding peso stablecoins to fight hyperinflation, So no, like that use case doesn't work. But does that mean that those are the only use cases that exist for stablecoins or will exist. And I think that's like part of the philosophical question one has to ask themselves about what you believe. Certainly what we believe is that broadly the world will have dollar going on chain. A large part of it is the going on chain part, putting a fiat currency on chain and letting it move permissionlessly, borderlessly, and all the benefits that come from that. And that benefit is not limited to dollars. Like other currencies, as long as they're going to exist in the world, I think we'll also benefit from the benefits of that blockchain can provide, and the speed and the finality and all of that sort of stuff. And so high level, like that's kind of what we believe and why we were comfortable going down this path and investing. But roundabout way of getting to your question, Julian, which is like, well, you're probably saying, well, what are the use cases you see today? And there's a number of them that we see that dollar stablecoins can't fulfill, can't actually fulfill. One of them that I'll call out, kind of the cleanest to explain, is what I would kind of term market access. And so at a simple level, it means there are plenty of companies looking to enter Mexico with their products and services. This is financial services company, fintech company, payment company, crypto exchange, looking to enter Mexico, serve Mexican consumers, denominate their products and services in pesos, because contrary to what sometimes you may hear, or sometimes people who aren't following closely believe, who paint all of LATAM with a broad brush, like all of LATAM is not just looking to get into dollars. I like to say Mexicans live their life in pesos. They live their life in pesos. They pay their bills in pesos. They think in pesos. They earn in pesos. Are they aware of the exchange rate? Probably some, a lot of people, but for the most part, it's not like stopping people's day. They live their life in pesos. And so a lot of companies get tripped up in the fiat world to be able to accept fiat pesos, custody fiat pesos on behalf of users. The licensing and regulatory gauntlet you have to run to do that is kind of daunting, and for a lot of companies they pause. They've realized that digital assets, this is a common way not just in Mexico but in a lot of countries, where people say, wait, digital assets provide kind of like a better workaround, because I can hold digital assets on behalf of somebody in that country. I can't hold fiat on behalf of somebody in that country without license X, Y, and Z. To date, though, what that's looked like, that looks like, Binance holding, USDT or using USDT to on-ramp people in Bulgaria. I don't know, I'm making it up, like somewhere where they're not dollar native, and that's fine and it works, but like you're forcing somebody into a currency to think and to work in a currency, live in a currency, pay FX to get into a currency that's not native. And so getting to the point here, Bitso has a leg up with MXNB because we're directly connected to Bitso's SPAY rails, and we can do that on behalf of partners because we are a licensed what's called IFPay in Mexico. We have a sub entity that's a licensed IFPay and are one of only 8 companies that are directly integrated to SPAY. That creates some very unique capabilities because we've directly integrated the mint and burn of MXNB with these ramps. Putting it all together, if you're that fintech company, that exchange, and you want to enter Mexico and you're getting tripped up on fiat, what that we're actually getting a ton of inbounds on right now is, wait a minute, I can put this together and I can enter the market. I can market to Mexican users. I can say load pesos on your account, and then when they load pesos, it can be immediately converted to a digital peso, to an on-chain peso, MXNB, and then that can be held with me and I can custody that. So I didn't force them to pay FX to get into USD whatever right away. I didn't force them to think in dollars, but I also didn't have to contend with the fiat difficulties in the market. I can use a digital peso to serve the market better. That's amazing. That's the best user experience. That's clearly the superior user experience. And yeah, I want to use a peso stablecoin for that. So long-winded answer, but that is what I would term market access, enabling companies to enter the market and serve local consumers with a digital peso. And we're actually seeing a lot of inbound where people are kind of realizing this. And it's not just in Mexico, by the way. We're seeing this in Brazil as well. And I think you're going to start to see this. We're seeing the tip of the spear, the most forward-thinking companies on this, and this makes sense to me, of local stablecoin usage, are those who are already comfortable with dollar stablecoin usage. And that's things like crypto exchanges and already sort of crypto native like fintech apps. They're already comfortable with dollar stablecoins, and they're the first ones to say, wait a minute, can we use non-dollar stablecoins in a way to make our better user experience for our users? And they're saying yes. My thesis is that we're on the beginning of a wave where there's these greater realization. You're going to see, first somebody's going to see an exchange do this, and then a fintech company that's not a crypto exchange is going to be like, wait, that is a better user experience. I'm going to do that too. And then a bank, and so on. But it makes sense that a lot of the companies out there right now that have not been in the crypto world for the past few years are like scrambling to get their stablecoin strategy in place, right? Boardrooms around the world are saying, "What's our stablecoin strategy for the past 6 months?" And it makes sense that that means first get your dollar stablecoin strategy set. And I think that's what's happening right now. And the tip of the spear is the companies that didn't have to have that conversation the past 6 months because they had this conversation 2 years ago or 3 years ago. They're the ones who are the experimenters with non-dollar stablecoins. I think you're going to see all these other companies follow suit once the example is there and once they're comfortable that their dollar stablecoin strategy is set. And I think that's what this wave over the coming years is going to show. And that's what we've kind of the bet we're making here.
Yeah, like this is pretty interesting though. I was thinking here in Brazil, and we have a situation where there's a lot of interest for NRAs, which are non-resident accounts, right? And we have two types of non-resident accounts in Brazil, which non-resident accounts is basically like a BRL, account, which of course, as the name says, is given to a non-resident. Because by default, for you to have a BRL account, you need to be Brazilian, so you need to have like a CPF, which is always tax ID or something like this. But here's the thing, there's a huge demand for NRAs in Brazil, and you have two types of them. The first one is the NRA, which is for your own or your own interest, right? So for example, you have a entity in Brazil, you have another entity offshore, you want to move money between your own entities, right? Which is like a first party use case. And in recent years, we have the surge of third-party focused on NRAs, where you can use your own non-resident account to move funds on behalf of others. And this is how a lot of these companies like EFXs started to move money here in Brazil, started to facilitate payments for Spotify, Netflix, and all these companies that were looking to enter the market. And as you were talking about these use cases, I was thinking here aloud. And I think this could be maybe in the future, thinking out loud here, that this could be like a new way of opening up non-resident accounts for individuals or businesses that are not, fully on with the local entities, local operations in these countries. And I think this could be a very, very cool use case and a very good way of using this benefit of the blockchain technology to make things easier and to, as you mentioned, right, give access to the market. And I think this could be very interesting. And based on these experiences that you guys have been seeing in the market with MXNB, which are the most use cases that have been seeing? Like, is it mostly for like individuals, I don't know, payroll platforms, or do you already see a lot of B2B flows? So I'd love to hear about what you guys have been seeing in the recent experiences.
Certainly, I've seen a number of payroll companies starting to enter and say like, oh, there's a lot of companies like Payroll and others that are also skating to where they think the puck is going. And so they're getting it, they're sort of saying like, do we have a ton of companies saying my employees want to be paid in a peso stablecoin today? Probably not, but they're saying it's going to go there. And by the way, like yield is also an obvious topic. Like in Mexico, the CETES, which is the equivalent to the treasury rate, is 7.5%, and that's pretty attractive. And when people learn that the Selic rate is 15% in Brazil, their eyes get wide and they start to get really, really, the gears start turning. And so yield under these stable coins is an obvious, like, why would somebody want to get paid in a peso stablecoin? Could be yield. But what I see them doing is putting the pieces in place to be ready that when they do get the question from their employer clients, they can say, yeah, we can facilitate payments in a peso stablecoin. On the payments front, on the B2B payments front, let me address that, because kind of my example earlier on was kind of like, no, we don't, I don't know that it's going to take the place of the dollar stablecoin sandwich. There's maybe a few exceptions to that, and it would require sufficient liquidity. And like MXNB is still small. There's a bunch of pieces coming and building blocks every day. We're adding more building blocks, and I do think it's also sort of about riding this wave that comes and being in a position to ride the wave. But there's sort of maybe 2 points on the payments front. One is, the main one I guess I'll point out is the traditional stablecoin sandwich has two costs. I call them the polar costs. There's a cost to get in, and that might be FX, like whatever fiat you're getting in with to the stablecoin, and then there's FX to get out. It might not be FX, but there's usually a cost. What I mean is, dollars in the US going to Mexico, somebody might pay dollars to an entity in the US that probably isn't Circle or Tether. So they're not the issuer. So it's a broker of some kind to get USDC or USDT is usually how this goes. That third party that's providing it isn't doing it for free. They're not getting dollars into the stablecoin one-to-one. So there's a cost there. And then that stablecoin will cross the border and come to a company like Bitso. And then it needs to find its way to pesos. And so it gets turned into pesos, and there's an FX cost there. And then it goes where it needs to go. So I call those the polar cost, one on the way in, one on the way out. There's two ways that local stablecoins, you can see in theory at least, could really improve the model. And there's some experimentation we're already seeing. One, sort of, I would say this is a long-term one, but like, it's just a point that if dollar stablecoins are used today, if instead of US to Mexico, it was Brazil to Mexico, there's a good chance a dollar stablecoin is still being used in the middle there. And that's kind of silly in the long run. Like BRL to USD, whatever, USD, whatever to MXN, there's definitely two FX costs there, and that seems a little inefficient. Again, the reason for this is because of liquidity. The liquidity with those dollar stablecoins is just unparalleled. But in a world where like the liquidity of either a real stablecoin or a peso stablecoin was sufficient, that's what should be used in that flow. It should at least be paired with one of the two fiat currencies so that you can minimize the cost to either get in or get out. And taking that a step further, and this is where we're seeing, I think, pretty cool experimentation that I'm very interested to see how it goes, is experimentation with different models where you're putting issuers together, right? So we are a bit unique in that Bitso has a cross-border payments arm and has the ramps, has very high quality MXN and Real ramps, and is the issuer. And if you put two issuers together for cross-border payments, you can do interesting things. So in contrast to the traditional stablecoin sandwich as I described it, imagine this. Somebody has dollars in the US, they pay dollars to a stablecoin issuer who does give them a US dollar stablecoin one-to-one because the issuer has a different business model and can monetize in different ways. So they get into a dollar stablecoin one-to-one. They eliminate that first cost. Imagine it's going to Mexico, and first, ignore how for a second, it finds its way to MXNB, our peso stablecoin. We will burn that one-to-one and turn it into MXN and send it where it needs to go via our SPAY ramps. So we've just eliminated that second polar cost. And what that structure does then, stating the obvious, what needs to happen is that dollar stablecoin needs to convert into MXNB, and that there's this buzzword that everybody says a lot these days, which is on-chain FX, and it means a lot of things, but that's one example of how on-chain FX might manifest. And in that such a structure, what is the total cost of that? Again, this is just a payment. Somebody wants to get dollars to pesos. It's all about the total cost. Can that structure I just described, which eliminated the polar costs, it pushes the cost to the middle, and it's all about the FX between the two stablecoins. Can that like be superior than the traditional stablecoin sandwich? Is it today? No, there's not enough liquidity. Can it be someday? Maybe, I don't know, but it's going to be really interesting to see. And we're seeing very well-funded and sophisticated companies start to iterate and experiment with models like this, and we'll participate in some of those. So that's like the areas where experimentation and payments kind of starts to make sense. And then I guess the third one I'd say is today in payments involving stablecoins, for the most part, I'm curious to see if you guys are starting to see different, Caio, you in particular with your business, but like most companies are still off-ramping to fiat. When the day comes where a company says, I'm cool just receiving the stablecoin and sitting in it for a while, the whole world changes with regards to like what stablecoin is used. Maybe it's a dollar stablecoin, but there's a lot of reasons why a local company, like if their business is denominated in the local currency in reais, they pay their payroll in real, they pay their supplier in real, but they are comfortable keeping their money on chain because there's a bunch of benefits of keeping it on chain. It's a question whether it really makes sense for them to keep it in dollars. They're taking implicit FX risk by keeping it in an on-chain dollar for too long in their treasury, for their treasury function. So the second that they say, for my treasury reasons, it makes sense for me to keep it in an on-chain version of my local token, and therefore I'm willing to accept that token in a cross-border payment. And I don't need to off-ramp it. I don't need to convert it. I don't need to pay FX. I'll keep it, or they keep it in, whatever they receive. Like we're in a different world when that happens. I don't think we're there yet. I think we probably will get there. Again, I don't know why money works better on chain. So I think that will hold true, and these things will continue to like show themselves.
You touched on several relevant things, no? And I can relate on one of the things you were discussing at the beginning, no, which is providing yields. That for Argentinians it was super important, no? Like at some point, like the first Argentinian peso stablecoin we had were just about to be able to have yields on chain, no? And that was mutating and transforming into new use cases. So my question is, we are now seeing that US dollar stablecoins are being regulated in the US. So the MiCA framework in Europe is also regulating stablecoins. So a lot of points you have touched here. And Caio also mentioned the non-resident accounts, the ability of minting and burning one-to-one, the ability for non-residents to hold stablecoins. So most of them depends at some point on local regulations, right? So how do you envision like the next couple of years can be regarding, for example, Mexican regulators regulating Mexican stablecoins, Brazilian regulators regulating Brazilian stablecoins? Do you think that that can be affecting the on-chain world on this kind of stablecoins as we are seeing now?
I, I've been on a few, like I've contributed to a few reports recently and been on some panels, and there's been a question that I've seen a few times is sort of like, what do you think is the most impactful like macro factor to unlock either local stablecoins or just stablecoins in general? Is it economic? Is it technology? Or is it regulatory? And my answer is kind of like, absent a major macro shock, like economic shock, that either hurts or massively accelerates move towards crypto. Like there's some things that probably wouldn't be good for the world, but you could see like defaults depending upon like sovereign nation debt defaults or things like that that might be bad but might be good. Like there's a bunch of different scenarios there. Absent that, my answer is 100% regulatory is like the obvious piece that's needed for the unlock. And you touched on something though, Julián, which is like every country is vastly different in terms of like their regulatory posturing and the signaling that they're showing. Brazil is actually quite collaborative. Like the Brazilian regulators, while they're kind of crazy, there's something new every week. There's some new IOF proposal and things like that every week. Nevertheless, as they're, I mean, it's my understanding from my colleagues, like nevertheless, they're collaborative. The approach is like wants to build it, and it's an open approach to doing it the right way. And Mexico's a little bit, I think, more cautious, I'd say, in their approach. It is like getting this, the clarity piece though is kind of critical. Well, one thing though is, we are partially regulated today out of El Salvador and aim to continue down that path. And there's nothing saying that a stablecoin needs to be issued from the country that its underlying currency is pegged to. People often think that, like it must be the only option then for regulation of a Mexican peso stablecoin, and that's not accurate, right? Like the biggest stablecoin in the world, USDT, is essentially shifting its jurisdiction. I don't know technically where they are in that, but to El Salvador, right? Tether's headquarters in El Salvador. The licensing is moving to El Salvador. And so there's nothing kind of that says that, which I think presents opportunities certainly for jurisdictions to present themselves as a viable place. But the other thing that's also interesting to see play out, and I think may be an unlock, is obviously people say, well, we got Genius in the US, and like, oh, okay, like is that going to create a domino effect that like, jurisdictions are going to follow suit? I don't know about follow suit exactly, but there's an interesting clause in Genius that doesn't get a whole lot of acknowledgement because nothing's happened with it yet, but I certainly am interested in follow it, which is that the Secretary of Treasury, Scott Bessent, today, but whoever is in the Secretary of Treasury at any time, has the ability to designate a foreign regulatory regime for stablecoins as recognized, right? There's a passporting clause that the Treasury Secretary is able to say that jurisdiction passes muster, like we think they're okay, and then there's a passporting between the US under Genius and other jurisdictions. And I think this is quite interesting, and I'm obviously very curious to see how it plays out and what jurisdictions kind of are the first ones to get the nod. But I think something like this, I do think that is a way though that Genius extends its influence, because clearly in order to get the nod from the Treasury Secretary, like the regulatory regime that gets approved needs to like largely similar, like they're similar on the key points to Genius. And so that's creating a bar where we're getting asked a lot more about things like that show up in Genius, like bankruptcy remoteness and I don't know, like a variety of the kind of the risk things that show up in Genius. And I think you're starting to see I think that's part of the reason why, because people assume that one way or another, things are going to kind of gravitate towards Genius. But what that means and how fast countries that don't have a regulatory framework today adopt one, I sure hope it accelerates it because there's no stablecoin issuer that wants, well, I don't know about none, but we don't want to not be regulated, and because there is no stablecoin framework in Mexico, it's issued under fintech law. But I think most stablecoin issuers would like clarity, and so that's sort of the moral of the last 5 years in crypto, right? Give us clarity.
Yeah, 100%. And I want to follow up on the thing that you were talking about. Basically, when we were discussing about the use cases of a local stablecoin and all those things, one thing that I always think about is now, especially after the Genius, we started to see a lot of companies doing issuance as a service, let's call it, right? So you have some companies in the market that, okay, come here, we can issue a stablecoin for you, you can use our infrastructure, we have this, and that, we are regulated by the Genius Act and blah, blah, blah. But of course, this is kind of cool because today, everyone kind of can have its own stablecoin, but at the same time, depending on how you see it, it also creates a problem when it comes to fragmentation of liquidity. And one thing that in events, too, conferences and panels that we always go to and talk to people is that try to figure out how this market will be in the upcoming years, because if and when we see like thousands of stablecoins, like everyone we try to have its own stablecoin, you have the banks and consortiums that are also issuing their own stablecoin. So like how would this end? Like will we need to have like a full-on interoperability protocol for every and each of these stablecoins? Like how can we solve it? Of course this is not a problem yet, but it might be in the future, right?
The
Yeah,
true decentralization, right?
Yeah,
yeah, right.
exactly.
I be curious to hear your guys' thoughts on it. My take is this, is that the temptation is too strong right now for a lot of companies to not try to issue their own stablecoin, but that consolidation is inevitable. I think if I imagine what happens in a lot of boardrooms and there's like startups starting dollar stablecoins. I mean, this is largely a dollar stablecoin phenomenon today. Everybody make your own dollar stablecoin. We're not seeing that proliferation in non-dollar stablecoins for obvious reasons. We know what the market share of dollar stablecoins is high, and people. I think Tether's quarterly profits did more to get people than any other single data point to get people being like, we should issue our own stablecoin, and it's probably like a misleading kind of factor, but I also think that over the past year or whatnot, as the stablecoin boom and we went through stablecoin summer, I imagine that in boardrooms around the world, there were board members that got anxious and said, "What's our stablecoin strategy?" And somebody on the other side is expected to like say something big and aggressive. We're big company X, we're marketplace Y, we have this many hundreds of millions of users, so clearly we're in a position. So the answer can't be like nothing, let's just participate in it and use these tools that somebody else made. The answer to the board, they feel like they need to come with something big, and so they're like, we can issue our own stablecoin and we can dominate and we can do it because we're this big company and we got this big ecosystem and let's make it big. And then the board says, yes, that's the appropriate amount of like aggressiveness that I wanted to hear. And so it gets greenlit. And so that's one of the ways that we get here. And I'm not saying that there's not, big company X or Y that will not be able to, that they'll all won't be able to do it. I think there will be some level of consolidation. I personally don't want to be in a world with too much fragmentation. I mean, if you're familiar with the history of the dollar, like there's a thing called wildcat banking, which is where every bank issued their own notes. This is before the US dollar. Every bank issued their own notes, and you'd get a IOU essentially from Ben's bank and it wasn't interoperable with Caio's bank. And so then you just have these like complete crazy interoperability problems. That's kind of, in some sense, what we're replicating here. Yes, I know you can use protocols for like seamless interoperability. I don't know. I hope we don't have to deal with too much. I hope there's not too much, but I do think the siren song is too, and that yes, we'll continue to see it, and that partially is enabled by some of the stablecoin as a service platforms. Just there's a lot of big companies like, no, we're going to build this ourselves. We have specific resources. We're going to do this all in house. What what my thesis is that so David from Etherfuse, I think, shared a good stat in the past that I did some digging into, which is something like, depending on how you're measuring it, the dollar is used in like high 50th% of global trade. Like it's not used in 100%, even though it's a reserve currency of the world. Like, non-dollar is used in 45-ish% of, global trade, and there's different ways you can slice it. And I struggle to think, but stablecoins right now are at a 99%, US dollar. I do think that we're going to see some convergence of these. I don't think stable usage is going to go where fiat is, because this is something that Brian Armstrong from Coinbase said that I kind of resonated with. People are going to go to the strongest currency for a lot of things. That's going to be the reserve currency of the world, not all of them. So in my mind, this is going to settle somewhere between the 45% of fiat of global trade and fiat that happens in non-dollar, and the 1% that happens on chain today. We're going to end up between there. But what that means, and getting to the point of proliferation, I struggle to see a world where we're going to have 1,000 peso stablecoins. I think all jurisdictions except the US are going to settle into a relatively small number of them. And it's the USD that's going to contend with, like, how many can we support and what interoperability challenge.
Okay. So Ben, one of the things that was really interesting for me was when you were mentioning like the rapidly changing use cases, and you mentioned companies like Tether, like they have the highest revenue per employee in the world. The market share they have is amazing, and nonetheless, there's newer companies like launching new US stable coins with new use cases. Hey, I'm gonna provide you X way and see yield, or I'm gonna like give you interoperability or like a closed system. So people are still trying to get new edges on this business, no? And based on this, so what are the 2 or 3 items or ideas you consider should be present on any company that want to be successful long term in this stablecoin business?
That's a good question. One thing that strikes me is having, this sort of states the obvious, but I think you start to need to have a real clear use case, but also go to market. Having a very focused strategy, I think, can be helpful, because general purpose stablecoins like Tether's ubiquitous, Circle is ubiquitous, and so to be like, at the end of the day, it's just we launch another token, and like this is different. Like there's like on blockchains, for example, it's a similar thing where there's new blockchains that come out that are like, we're a stablecoin blockchain. And it's like, what makes you a stablecoin blockchain that's a general purpose blockchain doesn't have? And there are a few things, but like by and large, they're general purpose blockchains with like a few features in particular that are perceived to be better for payments, but like the general purpose blockchains kind of match them. So anyways, similarly, you could be like, we're a stablecoin for payments, or like we're a stablecoin for this or that. But at the end of the day, like, well, you could use the existing stablecoins for it as well. However, the go-to-market and the relationships you have, I think, are a unique potential avenue. And the example I give is, and I don't want to, I know you're talking to Tomas from BRL1, so I don't want to steal his thunder too much, but BRL1 has a really unique reason for existing. It's not just, let's create a BRL stablecoin and see what happens. It actually came from a pain point that was identified, which is, I thought this was a very unique set of circumstances. Brazil is a unique market. Mexico has like practically one exchange that matters that has MXN denominated books. There are a few, but like Bitso kind of dominates, but there's not like dozens of MXN denominated exchanges. Brazil, in contrast, has like 20 exchanges that have BRL denominated books, which is relatively high, even for a country the size of Brazil. And there's relatively few market makers that specialize in making BRL books because of what Caio was talking about earlier. In order to do so, you need to be able to handle BRL. That means you need to be local. You need to be able to have a BRL bank account and a PIX account and stuff like that. And so, that's a specialized skill set, market makers who specialize in making crypto markets with BRL. And then it's a high cost of capital country. The Selic rate's at 15%. So those market makers are being asked to make markets across a lot of books, across a lot of exchanges. There's relatively few of them. They need to be very efficient because it's a high cost of capital country. If they leave their capital too idle on one exchange for too long, they need to be very nimble with their money. All right. So how do they move money very quickly to take advantage of serving all of these exchanges? Well, couldn't they use a dollar stablecoin? They could, or any other on-chain asset. But if BRL is their home base, that's what they're making markets in. Every time they go into USD, whatever, USDT, they're paying FX, and then they transfer it over, and then they're going to go into BRL, and they're going to pay it again. So that's a little bit less efficient. Oh, they could use BRL. They could just use PIX, right? Well, sort of, but you can't PIX between exchange accounts. So you have to off-ramp it to your bank, and then you have to PIX it on again. And my understanding is, depending upon the situation, there can be tax implications depending upon the specifics of the user. So BRL1 was originally envisioned to tackle this use case, and that's why it was created as a consortium between three exchanges that operate in Brazil and one market maker that makes markets on these exchanges in Brazil, is because there was a pain point that was identified and said, let's create a token that at least the initial use case is an inter-exchange value transfer mechanism to help make markets more efficient between these exchanges. And to me, that's powerful. That's a powerful message. We're going to get out and tell this story better into the market. We haven't done a great job today. You'll hear BRL1 tell that story a little bit better over the coming months. But to me, that's a great reason to start a stablecoin, not let me just throw my hat in the ring and see what matters. So I think I'd point to that first, is like, if you can build off of something like that, whether it's a function of the partners you have, the leverage you have, your own business in-house, which again is like where a lot of companies like, I'm Amazon or whatever, I'm making it up, like I'm going to make my own stablecoin because we're just going to do a closed loop within our own ecosystem and we're big enough. Fine. That's still a good enough reason versus just like, just going to make it and see what happens. Right. And so I think having like a strong narrative, strong story, a strong go-to-market probably is the most key. I don't know. The other two or three things, I guess luck. I guess just better. Also, at the end of the day, sometimes better to be lucky than smart. But that's probably how I'd answer that.
Yes, really agree. And of course, lucky, you need to be lucky, you have to get great timing, a lot of those things. And of course, the skills and the partnership that you mentioned. Yeah, 100%. But Ben, man, appreciate it. It was a very cool conversation. Thank you for joining Stable Talks. Of course, we could be here for hours still talking about stables and crypto. But it was really, really cool. And congrats on what you guys have been doing at Juno. I think you guys are doing a great job. And of course, I'm very excited to see how this quote-unquote on-chain FX thing will evolve in upcoming years.
You and me both. Thank you guys for having me on. It was a fun conversation. I could talk about my favorite topic. I could talk about this stuff all day, but maybe we'll do it again another time. But I appreciate you having me on, and thanks a lot, guys.
Yeah.
Thank you, Ben. And see you, Caio, and our audience on the next one.
See ya.
See ya.